I'm Will Beecham, ICIS Chemical Business Deputy Editor. I'm here with Paul Hodges, Chairman of International Echem. Hello, Paul.
Hello, Will.
Hi. You've written a piece for us recently on the European chemical sector, and you're going to be writing a series for us on Asia, one on the US as well. But looking at Europe in particular, could you talk a bit about how demographics are driving the economy here? We've got central bank QE going on, and you've got demographics seemingly working against that. How would you explain that?
Well, I think we're coming to the end of the myth that somehow central banks can change the course of demographics. If you've got an ageing population, you clearly haven't got very much growth, and that's the situation in Europe today. So and what we're seeing is the failure of a policy which has been in place now for minimum 6 years. And what's important, I feel, is to start thinking about what we need to be doing instead, because this policy isn't going to get any more successful, it's going to get less successful.
And what does that mean in terms of demand for chemicals?
I think it means that the structure of demand for chemicals is really now going to shift, that we can't anymore rely on simple product sales, because older people, by and large, mostly have what they need. When you're young, you may settle down, you may have kids, so you're buying new things for the first time. But when you get to 50 or 60, you already own most of what you've got. And of course, most people are moving on to a pension. They may do a bit of travel and so on immediately when they retire, but they don't. Maybe in the UK, you have £150 a week as your pension. You have an average pension fund across Europe of £30,000. So it really doesn't go very far. When you think that somebody aged 65 now has 20 years of life expectancy, a £30,000, $45,000 pension pot really doesn't do much for you. So the whole character of our business is going to have to change.
And you also discussed some sort of structural changes to the automotive and aerospace business models. Can you tell us about what's happening there?
Yeah, well, I think this is the exciting part, that other industries are ahead of us in grasping some of these changes. And if you look at the car industry, for example, what you can see is that there are a lot of experiments going on now which are not connected with selling more cars. In fact, they're about selling less cars. So you've got people like Google doing their self-driving cars. You've got BMW, Mercedes and others doing car sharing systems. I mean, here in London, the Mayor has just announced a £100 million project starting in January for car sharing alongside electric cars. And that is going to further reduce car sales. Now, that's bad news if you are just a product salesperson, if you like, or a product-oriented company. But it's very good news for the company that's got that £100 million contract. Say Bolloré, who got the contract in Paris, now have this contract in London. And this shows that if you become more service-orientated and more solution-orientated, because people don't really need cars, what people need is mobility. And if we can provide them with mobility using the skills and expertise we've got, then you can see that the world will change quite dramatically.
And what do those changes mean for the chemicals industry? How can we service that new business model?
Well, I'll give you an example. I would be very surprised in 5 years' time if, for example, you have a minor accident with a car, so somebody bumps into you in a car park and you need a new car bumper. I don't think that we will still be in a world where the manufacturer keeps all those supplies on their shelves for 10 or 15 years for the lifespan and they ship it out to you and so on. I think we'll be in a world where you go to your local garage, the garage downloads the design and they print it up. And so the question for chemical companies is, are you able to manage, and there's even a name for it now, it's called additive manufacturing or distributed manufacturing. And you can say, well, oh, wait a minute, that's a bit flight of fancy. Well, Boeing, quite a large company, are now manufacturing 20,000 spare parts for aircraft engines in this way. And if they have a problem, they don't fly out the spare part anymore from Seattle. They manufacture it in London or in Frankfurt, and they have FAA clearance to use it. So this is a much larger industry, if you like, that's already moved down that track. So if you can do it for aircraft engines that our lives depend on, you can certainly do it for car bumpers. And the game here is some people will stick with, oh, we'll be all right in the end, we'll get back to where we were, we don't have to change. And of course we all hate change. Yeah, it's understandable. Other people will say, look, change is an opportunity. let's look around, let's try some different business models, because this gives us a chance to gain market share and gain profit.
So are you talking about more local, regional chemical manufacturing to serve those local, regional...
Absolutely, that we're going to be moving to much more to as it's called, additive or distributed manufacturing, and it's really a supply chain revolution, because of course you can say it's much cheaper to manufacture a whole batch of car bumpers than it is to manufacture one in North London or North Paris or North Frankfurt and so on. But think about the cost of manufacturing that batch and holding it for 10 years. And that cost isn't just the working capital, the inventory, it's the theft. You know, Walmart, for example, are going down the same track in the States. And they say, look, we lose $3 billion worth of product through theft. Well, if you don't manufacture it, and it's not sitting on a shelf somewhere, it can't be stolen. So once you start to rethink your supply chain, then you suddenly realise we're going to be much cheaper, much more efficient. And that, after all, is what drives progress.
Thank you. And just finally, the oil price, it's low. Do you think that's going to be sustained, and will that continue to advantage Europe?
Well, we've had a number of conversations about this, and in my view, I think we're in the middle of the journey. You know, when we were at 100, I was saying, look, we're going to go back towards historical levels. We're now, maybe a half, 2/3 of the way through that. Of course, there are still people who say we'll go to 100. Again, not many people now. There are a lot of people who say, well, we'll stick at 75 or 80. But think of it from a life cycle view. We're going to have a big climate change conference in Paris at the end of the year, and already the G7 wealthiest nations have said we want to phase out the use of fossil fuels. Already the world's largest producer, Saudi Arabia, has said we're going to move towards renewables. Now, it doesn't take a lot of genius to say, if you've got a resource which is going to end up being left in the ground, you're pretty daft if you carry on struggling to get a high price and let other people monetize it and other people sell their higher cost oil into your market. So, what we see is that the oil producers now, the larger ones, are actually ramping up production, because a sale today is worth a lot more than a non-sale in 5 and 10 years' time. We're going to leave oil in the ground.
Yeah.
This is the fundamental truth. I think everybody is starting to accept this. So you have to sell now. So you have to get back to an affordable price. And of course, this is the other side of it. Affordable prices are very good news for the chemical industry. We don't like high prices. They take money out of people's pockets that could be used to buy our products. So we should be on the side of lower prices. That's our role in life. We shouldn't be wanting them to stay where they are. It's not good news for us.
Okay, thanks very much, Paul.
Thank you, Will.